You're listening to chartingwealth.com for Tuesday, the 25th of August, 2015. Does this kind of chart scare you? Well, what I'm talking about for those that are listening on audio, we literally see a straight 2-day chart because of the huge dip down today. I would say that the wick on the down candle, the red candle, is probably two times the distance of the down move. In other words, the market's rocketed down with the bears pushing them down like crazy. The bulls were able to push them up to some extent, but substantially down. Total market down almost 4% for the day, well, the 2-day chart. And we see a lot of down movement. Now, for those of us who were positioned in my own accounts, I did well today. I actually was in QID, which is the opposite of the Qs. It is an inverse, double inverse fund on the QQQ, which is the cubes or the NASDAQ 100. And I also was in gold. I've been in gold for quite a while. And gold, of course, recovered substantially from and continues to go up, showing there's always a bull market somewhere. Now let's analyze things a little bit. Let's go back. This is what IYY shows. Now let's look at the 4-hour, the half-day chart. Will explain this a little bit for everyone. What we saw happen was we saw the market roll over on the 4-hour chart back at 4 p.m. or the morning of the 20th, and then on through the 21st, and then over the weekend, the market got set up for the huge down moves today. Now, of course, what happens on a bad down day? Well, you're going to see most of the movement rocketing down in the morning. They call it clearing the stops, where they can take it to anybody who put in a sell order at the market, and you just get hammered. Well, that's exactly what happened. People got hammered in the morning. Then in the afternoon, there was some up movement on that candle. Total for the market was down 3.96%. How do you trade a market like this? You should have gotten in before it went down. How were we calling it? Well, if you remember listening to us talking about it, we actually talked about the market crossing over, going down on the 18th. And of course, it rocketed down on the candle, the 2-day candle on the 20th, and then of course the 24th, as we've seen today. Now we're back to the 2-day chart. Let's look at SPY. Well, it crossed over going down again on the 18th, rocketed down today. Not quite as much down movement. Down movement, yes, but as far as looking at the wick on SPY is about, I would say, again, the same length of the down movement on the red candle. If we revert back to the 4-hour chart, for those who are listening by audio, a lot the same, a rocketing down in the morning and then a pushing back up in the afternoon. And hard to make a call on when to get in if you were not in back when the market originally turned over around the 19th or so. Now, if we revert back to the 2-day chart and we look at the Qs turned over on the 2-day chart back on the 10th, and the Qs is where we really saw our trade, if you remember us talking about it. We saw on the 4-hour chart, and it's a little hard to see now, but we talked about how on the 14th, the Qs actually rolled back. In other words, it had been going down on our 2-day chart all this period, and it rolled up on the 4-hour chart and then crossed over again. And we talked about right around the 19th, the 20th, when it crossed over going down a second time to parallel the already down move in the 2-day chart. Okay, that was the time to get in. And if you would have gotten in around there, oh my gosh, you would have gotten in somewhere in the neighborhood. Well, let's look at the worst on that morning. You would have gotten in, if you got in at the lowest, at 107.90. Of course, where did the market close today? Well, it went all the way down, according to the candle here, all the way down to $86 at some point, but it rocketed back up. That was basically a clearing of the stops, but had opportunities there that we actually talked about. Now, those of you who are just getting into trading and those of you who've been trading, You make your own calls. We don't make calls here. We're not a stock calling service. Talk about what we see in the charts, but we do not give advice on when to get in. But we do like to see you virtually trading, and hopefully you were, and your virtual trading account has made an incredible amount of money that convinces you in the future you can do the same. So let's now look at the last thing we're going to for this session. We're going to go back to our 2-day chart. We're going to look at gold. Remember how we talked about gold crossing over, going up on the 12th, right around, well, the 10th to the 12th. It crossed over, both crossed over on the MACD, the moving average convergence divergence, and about the same time we saw our derivative oscillator also cross over, go from red to green. Usually a good sign. Had a nice trend line. That trend line is continuing to hold pretty well. Nice up movement in gold as the bulls pull it up, showing there's always a bear market somewhere. I happen to be in gold, and I liked the last few days. I'm feeling good. Okay, let's look at the 4-hour chart. We can see how gold crossed over way back, and we talked about how this 4-hour chart has been a pretty decent chart in and of itself for just charting gold. Just using the 4-hour, it crossed over on the 27th, and of course has continued to move up. Now what's interesting is gold may have hit its peak, may keep rocketing up, but it may have really hit its peak today. We see where it's pretty much been right around the 111.50, something like that mark, and then it's sort of rolled off. We've got a bit of a red candle as it ended the day. Now, it's not crossed over going down yet, but it's really high on the MACD, and the derivative oscillator has lost some of its speed. And the derivative oscillator has been an interesting oscillator for following what gold was up to. Again, we like to backtrack, look at things, and see how all of our different indicators perform, whether it's the MACD or it's the derivative oscillator. So pay attention to those things. Hey, we only care about what works. We don't get held to anything other than what works. So technically, we are in up moves on gold, both on the short chart and on the long chart. We're on down moves on everything else when it comes to the total market, when it comes to the Standard & Poor's 500, represented by SPY, and the QQQ, the cubes, the NASDAQ 100. Down on all of those, big downs. Hope that you had protected yourself. We're doing some good virtual trades, or if you know the market and were in the market, that you did well this day and had protected yourself. Well, folks, that's where we are. We'll continue to follow this fascinating market. Hope things are going well for you. And hey, if you haven't taken our short course free, we haven't charged for anything so far. Our short course, please go take it. You can find it at our website. You will like it. It will help you be able to figure out things like what's going on right now and how to read the market when it turns around, because it will at some time. Thanks so much for listening to us at chartingwealth.com.